Good morning, this is Killik & Co.'s podcast for the 25th of March. We'll start this week by taking a look at the diary for the scheduled announcements, both economic and corporate, for the coming week, just highlighting a few that are of most importance to Killik & Co. Starting off, obviously this is a 4-day week, so in terms of having Good Friday on this week, we'll be focusing on Tuesday, Wednesday and Thursday. Compass Group, we've highlighted here in bold, is the results for tomorrow. This is a covered stock for Killik & Co. We're expecting good results from Compass Group. They were some of the detail mentioned in the press over the weekend. Looking out for that company. On Wednesday we will have the third estimate for Q4 GDP, and obviously we've had the first two readings showing that we had a small recession, and this hopefully will give us a sort of possibly a more final reading for GDP going forward into the first quarter, maybe giving us an indication of how things are looking there. Similarly on Thursday we have the US GDP figure for that Q4. There is an expectation that number will be revised up from 0.1 to 0.5, so the US this week possibly set for a bit of a boost to economic activity. So just talking through some of the charts, and clearly the morning is being dominated by the overnight news of the developments in Cyprus. Markets are responding favourably to the fact that a disaster has been averted, and but when the details come out, I think it'll be quite clear there'll be many unhappy people. Cyprus's second largest bank looks like for deposits they're over 100,000, that there's a virtual wipeout. We're not sure yet as to quite the level of haircut that is being imposed at the Bank of Cyprus, but rumours of around 40%. So these really are sort of very, very significant developments, and will clearly, I suspect, to rumble on for many months, if not years to come, with legal challenges by people who have lost their money. But nevertheless, the markets are focusing on the positives, that Cyprus is not leaving the euro, certainly not this week at least. Focus will naturally turn to when the banks can start to open, and their hope for Tuesday, but feeling that it may take place later this week. So some of the charts that we'll look at will clearly show the impact of Cyprus and how the markets felt about the whole situation. So let's start off first of all with the peripheral bonds of Italy and Spain in over the course of the last few weeks, and we can see here that whilst we saw some heightened tension during the early part of March, really the risk never really got out of hand around Cyprus. In fact, you could describe the market's mood as fairly sanguine about the whole situation. A feeling that they would ultimately get to some sort of resolution meant that the nerves were tested but never really overcome in terms of risk over the course of the last week. And indeed what we are seeing is that yields on both Italian and Spanish are coming lower, as demonstrated there. And that certainly has helped put a bit of risk appetite back into the equity market. The euro itself, well, the euro has been coming off recently from that 136 high, but overnight developments meant that in Asia the euro traded back above 130 against the dollar. There has been some developments from Moody's talking about French banks. We'll come on to France in a subsequent chart, but so there's a little bit of negative pressure being applied to the euro as a result of the French comments, but broadly is a stable picture for most of the sort of key European economies. In terms of last week, we saw the budget. George Osborne was standing up and gave what is generally considered to be a better quality fourth budget compared to the third budget, and fewer chances for a U-turn. One sector that seemed to perform quite well on the back of the budget was the surprising development of the establishment of a deposit scheme to assist first-time and second-time buyers for houses looking to getting into the market. This really is to try and fill a gap where the banks have clearly moved from 90% loan to values to more akin to 60 or 70%, and therefore this scheme is designed to try and facilitate the gap that is clearly involved in the market and keeping volumes very low at the moment. So just drawing up really of a chart of some of the best of the sector, and Barratt Developments really has been in an uptrend now for some years, but you can see the large spike that took place in last week. and that was around 5%. Similarly with Persimmon at the moment, it's a sector that seemingly continues to attract favourable money because volumes are still very low, and with all of this government assistance, it can only be helpful to volumes from here. In terms of, mentioned France earlier on, just we mustn't lose sight of the fact that whilst we're dealing with the dramas and the crisis of some of the macro issues, the economies continue to deteriorate, and particularly so in France. And pulling this chart up that we saw last week that certainly caused a bit of shock around the system was the services PMI. Services to the French sector. The PMI is basically looking at forward guidance, trying to gauge confidence with those individuals who are very much at the forefront of the confidence, and when they are purchasing goods, they clearly only can do so if they have confidence. This chart really is deteriorating down to a level that we saw really at the bottom of the European recession back in 2009. So some really quite deteriorating trends there in France at the moment, and allied to the fact that we heard about Moody's downgrading some of the banks or potentially putting some negative comments, I do think that the European economic growth is going to remain very subdued and continue to keep at the forefront of investors' minds. In terms of stocks, I mentioned this week, I'm going to just put the chart up of Compass Group. This is a covered stock for Killik & Co, so we'll be eagerly anticipating those results that are due out tomorrow morning. As always, a copy of our recent research notice available through the brokers. Last week we also saw very strong results out of Nike in the US, that stock surging from $54 to $59 on the back of those results. Again, that is a covered US stock that we have available. Just some other news which I think should be of focus. BP announced the share buyback program, which was about $8 billion, higher than the $5 to $6 billion range that was estimated. So that should be helpful for the stock. And finally, we continue to find favour with Vodafone at the moment. The story won't go away about the conversations that are taking place between Vodafone and Verizon. Indeed, the Sunday Times again covering this weekend the thoughts that a deal could be concluded as early as Q2. Obviously market speculation, but you do get the feeling that some resolution towards splitting up Vodafone to Verizon, or indeed merging them, is under some serious discussion at the moment. So that share price is indicating to you that there could be quite a big valuation creation situation here for Vodafone. So one that we're keeping a very close eye on.